Hi, thank you for joining us for today's webinar. We're going to go over the basics of financial wellness and just a couple of logistical housekeeping items. We are recording this webinar. We will distribute it afterwards and it'll be posted on the Corrections to College Facebook page. And we're also taking questions throughout, so you should feel free. It's either going to be at the bottom of your screen or at the top of your screen. You should see a Q&A box. So feel free to click that and ask us questions really as they come up for you, and we'll go through them as they come up, and at the end we'll definitely leave time to address the questions that you have, because ultimately we want this webinar to be helpful for you, and we want to answer the questions or concerns you might have over financial wellness, loan default, issues with loans, anything that's going to come up for you. So I will pass it over to Erica from Bank of America. So thank you.
Great. Yeah, thank you for having me. So good morning, everyone. So my name is Erica Jones. I am with Bank of America. I've been with the company for 20 years. And I am also our financial literacy officer in San Francisco. So I have the opportunity to talk to folks like yourselves and other nonprofit organizations about really getting some helpful tools around financial capabilities, financial understanding, and ultimately economic mobility. So thanks for having me. I also grew up in the Bay Area. I went to the Peralta colleges, all of them, as part of my undergrad career, and I used to work just down the street from here where we are in downtown Berkeley. So it's great to be back in Berkeley today. So thanks again for having me. Today we're going to go through a little bit about sure I have my screen sharing here. So a little bit about budgeting and basics. We will also talk about some of the topics that were brought up by you around managing your debt, how to deal with debt that has maybe gone to collections or things that have defaulted, or how to really repair your credit. And then we'll also go into some other topics around paychecks and also protecting yourself against fraud and identity theft. So it's a lot of information, and again, as you have questions, feel free to send them in over to Kelly, and we will. I'll try to address them as they come in. So going into budgeting and basics. So again, these are some of the topics that we will learn in this particular module. So first, when you're thinking about debt, it's really important to think about what to do and what not to do. And these are some preliminary lists of things to pay attention to. So first of all, always prioritize paying off your debt. If you are in debt currently, it is important not to, put things aside and try to forget about them. Really want to focus on them, figure out what you have, and start to prioritize paying off your debt. Also, paying on time. So paying your bills on time or in a timely manner keeps you from falling behind. It can also help you to avoid any late fees or interest charges that tend to go up if you are behind on your payments. So especially if you're not already behind, you definitely want to focus on those due dates. Next is sticking to a spending plan. So if you don't need to have something, don't buy it. Make yourself a plan. Try to avoid impulse buying, and we'll talk about some of that a little later today. Then in our don't category, so don't just pay the bare minimum if you can. This is, of course, based on any credit cards, any loans that you have, that minimum payment that you have. If you can afford to pay a little bit more than what that minimum payment is, it definitely will help you in the long run. Next is don't forget about your accounts. If you have a card that you are not using, maybe it's maxed out or maybe you don't even have a balance on it, continue to look at your statements, continue to monitor those accounts. One, to make sure that you don't have any fraud that's happening on those accounts, but also to make sure that you don't have maybe a recurring gym charge or something else that's coming onto those cards and you're just forgetting to pay it. And lastly is don't shop till you drop, which really means don't max out your credit cards. Don't go on sort of frivolous spending sprees. While credit cards are easy to use, you definitely have to pay for it in the long run. In the example you see on the right-hand side of the screen here, this is a quick calculation about how much you end up paying in interest and how long it will take to pay something off. So in this example, the credit card balance is $5,000 and the interest rate is 13%. So if you see in the first column there, if you pay just the minimum payment of $100 per month, it can take you 23 years to pay this card off. And the total interest that you will pay on top of that $5,000 that you already owe will be $53.59. So it's a lot of interest you end up paying over time. On the right-hand column, if you make a higher payment, just $75 per month more, and again, this is just an example, you can actually pay that card off in 3 years. That's 20 years less than what it would take if you were making a minimum payment. So, and then the total amount of interest you would pay is $1,016. So a little bit more than what your minimum payment is can go really a long way. All right, so I'm going to go into, these slides look a little bit different, and this is, again, based on some of the feedback that Danny was able to get from students ahead of time. So the FDIC has a financial education curriculum as well, and so I've inserted some slides here to really talk about, you know, what to do if you've experienced default on your loans, maybe some loans have gone to collections, you weren't able to attend to them, or you didn't have anyone else that was able to help you with some of those things, and so they've gone into default and you want to pay attention to them now. So here first are some locations where you can look for assistance. So think about any local programs or state programs. You know, do a web search if you can, but here's some websites that we suggest. One is ed.gov. So this will be a great place to learn about if you have any student loans out there, or any any ways that you need help addressing some defaulted student loans. There are different repayment options that you can enter into. The next website is benefits.gov. So benefits.gov is a way for you to find any federal or state assistance programs. You can enter your information and you will be able to find out, you know, what do you qualify for. And then lastly is makinghomeaffordable.gov. This is if you need assistance in any mortgage payments or anything like that you've fallen behind on.
And I'm going to just jump in. I think someone has a question about the previous slide, asking about paying off debt. Mm-hmm. And the question is, like, what do you do if you're already in debt, but you are not in a financial position to pay the maximum amount on your bill? Like, what would you recommend an approach be to someone who kind of knows that paying the minimum is not ideal, but has sort of that mirrors their reality?
Yeah, absolutely. It's a great question. So a couple of things. So the minimum payment, if you're able to make it, is something that you should try to achieve to do. So however, if you're not able to make that, and there's actually some slides later in my presentation that will go over it, but contact the creditors and tell them your situation. Almost every single creditor that is out there has a financial hardship program or policy. They have ways to work with you. Maybe there's a 6-month period that they can say, you know, we will waive your payments for 6 months until you're able to get back to making payments. Or maybe they will say, you know, you can pay us $10 at a time until you're able to get back to, you know, a full minimum payment. So there are some options that you have. My biggest piece of information is always communicate with that creditor and tell them what's going on. Avoiding it and not communicating, you know, why you're not able to pay or what's going on in your life right now is actually a way to get it to go to collections or to be to turn into bad debt faster. So communication is always key there.
That's great, and thank you to the person who asked that question. Feel free throughout, like we said, to just continue to ask questions that apply to your particular situation, because there are, you know, the intention of this webinar is to give you a broad overview, but to also be specific in giving targeted advice where we can.
Absolutely. Thank you. All right, so going back here, so we're talking about rebuilding credit. So one of the important things is always have a copy of your credit report. You can get a copy of your credit report once a year, every year. Is there another question that came in? I'm happy to stay on the topic.
We do have another question.
Great.
Someone's just curious, is it true, is this truth or is it rumor, that if they send any kind of money to a creditor that they cannot default the account?
That is not true. So if you send, let's say your minimum payment is $50, but you're paying $10 per month, you can go into default. However, if you are all in some sort of payment plan and you talk to them and you have an agreement between the two of them, between the two of you, then maybe that lower payment is a cause to not default. So I think it depends on the terms, and I think it depends on the creditor and what you've arranged for them.
Got it. So just like another element of life where communication always is super helpful.
Absolutely. Thanks for that question. All right, so in looking at your credit report, you want to identify and correct any errors. So again, contacting your creditors, explaining the situation. If there are any errors in your credit report, say there's an account that was open in your name that you did not apply for, or something shows as defaulted, but you know you paid it off, something like that, always identify those and contact the crediting agencies and let them know. Again, negotiating payment plans with creditors and letting them know when you will be able to have time to pay them. And then opt out of receiving unsolicited offers from cards. So there are settings that you can set so you can contact an agency directly. I know Capital One was notorious for a long time of sending out, repetitive credit card offers. So you can contact them and say, please do not offer any other cards to me. Here's where you can go to order a copy of your credit report. You get it free every 12 months. If you have, there's a new program though that if you have a credit card with a company, you can look at your credit score, so you can at least monitor your FICO score directly through any company that you have credit through. I recommend only using annualcreditreport.com. And this is because a lot of other companies will offer you a credit report, and legitimately they will give you your credit report, but they may have some fine print where they have signed you up for a credit monitoring process or some sort of monthly fee where they will look at your information for you. So I only recommend using this website to pull your credit report. And it uses all three reporting agencies: Equifax, TransUnion, and Experian. All right, so again, check for errors. If you think there's an error on your credit report, definitely let them know. They are required to respond to you within 30 days. They can't just get your inquiry and pretend they didn't see it and not respond to you. So some agencies require, I think like TransUnion may require that you send your inquiry in writing, but I think maybe Equifax or Experian allows you to do an inquiry online. So just go to their website and check out wherever the error is. And then when you're negotiating and talking to creditors, figure out how much you can actually owe, how much you owe. So what's the total balance that they are looking for you to pay, and then how much you can actually pay. So be realistic about what you can, and we'll talk about a spending plan later, but really, think about what your income is and what you can actually pay. If the creditor wants you to pay $400 a month on something until it's paid off, but that's not something you can do, then don't enter into an agreement with them on that. So really be realistic about what you can pay. Explain your situation, tell them what you can pay, when you can pay it, how often you can pay it, and think about what you want to get out of the conversation. Always document your conversation with them if you're trying to enter into a negotiation and you're really trying to work to pay this off. I know some collection agencies have better, recording policies than others, and so you don't want your information to get lost. So always keep a documentation of your conversation. Try to stay calm when you have it. Sometimes these can be stressful situations and can be nerve-wracking. And maybe, customer service sometimes may not be as great with some of these crediting agencies, but really try to stay calm and try to work with them, because that'll get you a lot farther if you can. You have a question that came in?
We do. So we have a question that we might need a question answer to provide some clarification, but they're sort of wondering regarding the default loan with a school that they have. They've this person has been paying on a regular basis for 2 years in the amount of $200, and they've been making that payment in order to be able to receive financial aid at their community college so that they're attending. But they were just informed that the government has changed the rules, and they are now wanting the full payment, and they are a full-time student. So we might need a little more clarification from the question asker, but I'm not sure if you're.
Yeah, I think I'm not sure where the original loan was given through. I don't know if it's a government loan specifically, or if it's gone through a program from the government, et cetera. So I'm not sure what the terms might be of that. But I will say there are repayment options. I don't know specifically what may have changed for 2019, to be quite honest. But I do know that with student loans, there are different repayment options. I don't know of a situation where terms have changed enough to where everything is now due in full. But I do know that you can have some income-based repayment options. You can defer and have forbearance on some of your payment options. So definitely look into it, because I have a feeling there might be more to that story.
And is there like a particular person that you would recommend the student reaches out to sort of like work through this issue with?
As far as with the agency or with the government, you mean?
Yeah, or like, is there someone, like a resource for really getting to the bottom of what's being asked?
Sure. So there are some credit counseling agencies that may be able to assist. I've got some information on them as well. There's not someone within the Department of Education that I would recommend, but I did give the website that's there. And, honestly, you also may have a counselor or financial aid counselor at the college that also may have some more information and a little more direction on how to move that conversation. Hopefully I answered the question, Okay. All right.
Well, let us know if you need more information around that particular.
Awesome.
Great situation.
All right. So again, being honest with the creditor. Don't accept a deal that you can't fulfill. Here's some information on credit counseling agencies. So if you need to contact and get some help, and really, maybe it's overwhelming, maybe you've got a lot of information that you just can't kind of wrap your arms around, contact a counseling agency. They can really help you to develop a plan. They can help you to manage some of these negotiations. There are lots of credit counseling agencies out there that that are not quite as upfront with the assistance as they seem to be. So I recommend going to nfcc.org. This is the National Foundation for Credit Counseling, and it's a not-for-profit organization that will help you to find a legitimate and respectable credit counseling agency. Just remember that no one can actually help you to remove accurate information from your credit report. If an agency is promising that to you, it is not legitimate. If you opened an account and it defaulted, then that is going to stay on your credit report. So, it just is about handling it and then allowing the time to go by where your credit will improve. It does take a long time to repair bad credit, so there's no quick fix scheme, if you will, that will allow your credit score to go up 200 points in, say, 6 months, right? So there isn't an option to, wipe the slate clean and start over. It will take work and it will take some negotiation. So just really paying attention, getting a start now, and hopefully in a few years, you'll be in a much better situation than you were today.
And I'll just say that we will send this presentation out as a PDF. So if you have questions or you want to click that link that we just showed, you'll have all of those options. We'll make sure you get it right after this is finalized.
Great. Mm-hmm.
All right, we have another question. I'm sort of wondering, upon building my credit, they've heard that you should not spend more than 35% of your overall limit. So for instance, if they acquire a credit card offer off of like a $300 limit, they try not to spend any more than $105. But they just got a particular card through a retailer that offers, it has a max of $700, and they just want to know if they should spend the full limit on their secure card of 30% or the overall limit on both cards, 35% on each.
Sure. So I think 35% is a good and sort of conservative percentage of what you should use of your credit. I would be careful of department store cards or specific store cards, partly because they tend to have higher interest rates. So there's kind of a more holistic view that you want to look at that. So yes, you want to keep your balances as low as possible, or some people use what's called the leapfrog system. So they will have maybe charge $50 one month and let that statement close so that it shows you have a balance, and then the next month pay it completely off, and so that the second month it shows that you have a zero balance. So there's a sort of off and on payment history that shows that you're able to pay off your card. Some folks are able to carry a little bit of a balance and then pay it down over time and don't use it again until it's gotten to zero. So I think, to answer your question, if it's 35% of each card or 35% of the overall total, I think it kind of is the same. Just be aware of what that interest rate is, what those monthly minimum payments will be, and how quickly you think you can pay it off.
All right, let us know if you need further clarification on that question.
All right, so we'll talk a little bit about debt repayment strategies here. So this is going back to our Better Money Habits curriculum. And there are a couple of ways that you can tackle your debt repayment strategies. So one is called the snowball method. So the snowball method is where you take, let's say you have 4 credit cards. You take the card with the lowest balance first, and you concentrate your payments on that card until it's paid off. And the other ones, you're paying minimum until then. So you pay the smallest dollar amount first. And then whatever you've paid, once that's paid off, whatever you would be paying to that, you take that money and you carry it over to card number 2. You focus all of your energy on that card until it's paid off. And now you've got 2 cards worth of payments that you were focusing on that now you can put into the third one. So it's a snowball method, again, because you're accumulating monthly payment amounts that you can pay. The second is the high rate method. The high rate method is where you focus all of your energy on the card with the highest interest rate. And I will say that the high rate method in the long run is the best method to take to save yourself the amount of interest that you pay over time. However, the snowball method, maybe you're the type of person that needs to see results sooner, or maybe that high rate one is just a little too overwhelming for you and you want to get some of these smaller ones off your plate. Both are valid repayment strategies. One, the high rate method is more of a long-term plan, and the snowball method is more of a short-term plan. So whatever works for you, whatever feels right for you, either one will work as long as you're really focusing on paying those off. In the interest of time, there is a video here that's actually quite good, but we're going to skip the video. Once you receive the presentation, you can click on it. It will have a hyperlink that will take you directly to bettermoneyhabits.com, where you can look at the video directly. And I'll show you the live site as well before we leave today, just so you can see how great it is and all the different topics you can look through.
And someone just asked when this webinar would be available. We will make it available either this afternoon or first thing Monday morning, and we'll make sure to email it out to anyone who's participating today, but also email it out to any of the students who are in the Leadership Institute in particular, who are either working or were unable to join today.
Great.
Question. All right, we have another question.
Mm-hmm.
So this person is curious. They've had their secure credit card for more than a year, and they're wondering if their bank or credit card will offer them an unsecured credit card, or will they have to go and apply for one? And what should they be looking for in terms of the limit on a new credit card?
Gotcha. So that is not always an easy question to answer, but I will tell you that starting with a secured card is a really, really great option. So I'm happy to hear that a couple folks have talked about secured cards. If you have the ability to put $300 into a savings account for a certain amount of time and get a card for that same dollar amount, so basically there's collateral in case you default on that, the bank can use that money to pay off your card. But it's a really great way to rebuild your credit. Now, every bank is different, or every credit union is different on how long it will take them to feel comfortable offering you an unsecured card. A year is a really good indicator. It shows that you have history. It shows that you've got some payment activity. But you'll just want to contact your bank and just say, you know, I've had this for so long. What can I do? Some companies will have the option of just converting it and then releasing your collateral money back to you. Some companies will ask you to reapply. So it's I would talk to them directly and just see, you know, what they offer. But that's a really great question, and I think a year is a good time frame where you can start to ask those questions.
And what in terms of like, how should someone figure out what limit is healthy for their financial situation?
Sure. So it all depends on what you're looking for. I would say if you have a secured card of $300, I would not expect for an unsecured card application to come back with more than $1,000 available to you. So again, they're going to look at what your income is right now, what your capability of repaying is, what your payment history looks like, if you've had a bankruptcy or items that are still in collection that you're not, you know, attending to. Those things will all be taken into consideration. So I think if you're starting off and coming off of a secured card, I would not expect a card to be more than $1,000.
Great, and just let us know if you need further clarification on that question.
Great. All right, so we'll talk a little bit about different types of accounts here. Some of this information may be review for you. You may already know this information. For some of you, it may be new, so I want to go into it anyway. So first, you have a checking account. So checking accounts, they give you easy access to your account. You get a debit card with a PIN number that allows you to take money out of your account. Some accounts come with a checkbook. So if you have a landlord or a rent payment that only takes a check payment, maybe they don't have an option for you to pay online or with a card. One thing to remember that there may be fees that come with a checking account. Some ways to avoid fees might be getting direct deposit or maintaining a certain balance or different criteria depending on the institution you go to. And again, I meant to mention before this starts, I'm not wanting to, convince you to go to Bank of America to open an account. That is not my purpose here today. I think credit unions or financial institutions, whichever bank or company feels, best for you is where you should go. My advice is always just to ask what the terms of those accounts are. What type of fees, how can I avoid them, and where, how convenient is it for me to access my money? So there's just some conversations you should have when you're opening an account. A savings account, again, is designated more for long-term goals. It is meant to be a savings account. So you can earn a little bit of interest on, right now, interest rates aren't super high, but as time goes on, they may go higher. And as your balance grows, it may be more. One thing to know, though, is that savings accounts have limits on how many times you can take money out of the account. So always be aware of, if you are going to need to withdraw from that account several times per month, perhaps putting it into a savings account isn't the best idea, because there may be fees for exceeding the number of withdrawals per month. Also, always check the minimum balance for those accounts to avoid any monthly charges. I'm going the wrong direction. All right, so when we talk about paying things, you're out in the world, you're buying lunch, you're getting groceries, there's different ways to pay from the money that you have. So as you know, there's cash. As they say, cash is king. It can help you to avoid, using a credit card and going into debt. And one thing that some folks have suggested is to only have cash on them that they know they can afford to spend. And once that cash runs out, you can't spend anymore. So it's really a great option if you need someone to curtail the amount of money that you spend each day, right? The problem with cash is, of course, if you lose it or if it's stolen, it's probably gone. So that leads us then to a debit card. This, I think, is the most common way that people pay, whether it's a debit card that you get from an assistance program that you have, or a payroll company, or directly from a bank account that you have. These cards allow you to access your account directly. You swipe the card, the funds come out of your checking account. And if the card is lost or stolen, you have some fraud protection that's against that. If someone, goes on eBay and uses your debit card to make a purchase, then you can put a claim in for that transaction and get your funds back. One thing to always watch out for with debit cards is this is your cash, this is your bank account, and it's really easy to overspend and forget to keep track of how much you've used the card for. So if you don't have a method, maybe it's an app, maybe it's writing things down, maybe it's leaving notes for yourself on how much you've spent, but really try to keep track of what's in your account and what you've used that day. And then, of course, we've talked a little bit about credit cards. Again, it's also an easy way to make a payment on something. You can build your credit by using it. And there's also the same fraud protection that you would get with a debit card. Just remember that there is interest that is charged on credit cards, and there may be other fees, perhaps annual fees on your card. So always be aware of what you can pay back and how much it will cost you to pay back. All right, so we'll talk a little bit about budgeting and saving here. So here are some things that you might need to budget for. So emergencies happen. You may get a flat tire. Maybe your kid gets sick and you need to go to a doctor. Maybe something happens at home and you need to repair something. So emergencies will happen. It's always good to have a little bit set aside for emergencies if possible. Think about paying down your existing debt. As we talked about earlier, debt is really expensive. So if you don't manage it correctly, then your savings efforts may actually be eroded by the amount of interest that you're paying. Other things to think about are some short-term goals. Maybe you have a vacation coming up. Maybe you have a kid's birthday that's coming up. You want to think about saving in the short term. That's one idea.
So we have a question that's come in about overdraft protection.
Okay.
So this person's bank offers overdraft prevention. So if they try to buy anything that they do not have the money in their account for, it won't let them. And they're just curious if all banks offer this, or what you kind of have to look for when you go into a bank to make sure that sort of safeguard is placed on you if that's something you're looking for.
Yeah, so that's actually a really good question. I don't think every bank offers an account like that. I do know Bank of America does. I do know that there's one or two credit unions that do. I don't know the breadth of all of the institutions. And actually, one of that is I wanted to touch on earlier, so thank you for asking that question. So when you go into the bank, you want to ask them if they have an account, like you mentioned, that will safeguard against NSF fees, that does not have any NSF fees. And NSF stands for non-sufficient funds. And it's a charge that if you go below zero on accident or on purpose because you didn't have the funds, there is a fee. And sometimes those fees can be compounded, and it really happens quickly. If you have multiple transactions that come out per day, you can have multiple fees, and now you're in a hole that you may not be able to dig out of. So it's really important. So the answer is no, not all banks have that, but it's a really good way to help yourself. Just remember that it does mean that if you don't have the funds, there's not any leeway. If you're 10 cents short, you're 10 cents short. You cannot make that purchase. So yeah, those are really great options for you to have. All right. Other things folks budget or save for: retirement, education, of course. So retirement, one thing I will say that once you're out in the workforce, if you have the option of a 401k or a 403b, I think for nonprofits, take advantage of it as much as you can. That may not be, available to you now, but I can't stress enough how important it is to contribute even a little bit now, so that in the long run and once you're older, you're able to use those funds and have a little bit easier time with income. All right. Talk a little bit about emergency savings. So we talked, there are lots of reasons that folks would need to have a backup savings plan. So again, medical bills, house repair, car repair, things like that. So we recommend that if you're single, if you're living by yourself, responsible for yourself, we recommend that you have at least 3 months of emergency savings saved up. And what emergency savings are you take into account all of your expenses for the month. So how much your rent is, how much your groceries are, maybe your insurance, maybe how much, BART or a Clipper card costs. I'm sorry, I know folks are statewide here. That might be a local program, but so think about how much your transportation is and add that all up and multiply that by 3. And that's how much we recommend that you have in a savings account for emergencies. Was there a question that came in?
Yeah, someone is curious about retirement. They said, what if I want to set my own retirement? So I think if someone is I'm assuming the question is saying, like, I don't currently work somewhere where I have the option to contribute to a 401k, but like, what does that look like if I'm ready to start doing something?
Yeah. Great question. So contact your financial institution and look into an IRA. So an IRA is an individual retirement account, and there are some, federal requirements around how much you can contribute each year depending on your age, but it is a way for you to save for retirement, and you cannot withdraw those funds until you're a certain age. I want to say 57, 58 years old. But yes, those are great options. And most companies that offer 401k also suggest or offer an individual retirement plan. But you don't have to be, you can be self-employed, you can be a freelance worker, whatever you do, but you can go into any financial institution and earn interest on your money until you retire. Great question. All right, so if you're a family, we recommend 6 to 9 months of payments saved up in a savings account. This amount seems really daunting, and I'll be quite honest, it's really hard to have an emergency savings account. But if you are in a position where you can put something away every month, have this be a goal, whether it takes you a year or whether it takes you 5 years to get that amount built up. A little bit every month will help in the long term. All right, so we'll talk a little bit about how to put a spending plan in place. Again, there are some videos in this slide. If you'd like to watch them a little bit later, feel free to. And I'm just checking the time here. All right, we're at 10:38. So one is knowing your net income, and we'll talk about a paychecks a little bit later and we'll break it down, but knowing your net income, which is what you take home and what you actually have to spend. Maybe you make a certain amount per hour, but you don't take home that amount per hour, right? So make a plan, and once you know your net income, forecast what you'll spend in the coming months, then track what you're buying. I'll be honest, I had a spending plan in place, and then I realized I spend way outside of that all the time, whether it's, grabbing a snack on my way home after a long meeting, or maybe I grab coffee in the morning because I didn't have time to make it. I have been known to spend outside of my plan. So always track what you're doing. And whether it, again, like I mentioned before, whether it's you write it down, you use your bank's app, or you have other planning apps. There are some great applications out there that help you to manage your spending and your receipts and things like that. All right, checking in on your progress. So once you've tracked your spending, you've made a plan, how did you do? What did you overspend on? What did you underspend on? How can you reallocate some of that money? So always adjusting what your expectations are. A spending plan should be a working document or a working plan. So it should always be changing. Every month might be different. So always check in on yourself on how you're doing. So here's the spending plan, and I've sent a copy of this to Kelly, and so she'll share this with you. Print as many as you need, use an online version of it. The Bank of America website, the bettermoneyhabits.com rather, has a copy of this for you as well. So feel free to use this as you need to. So if you'll see here, there's lots of categories to put in, whether it's your utilities or your personal and medical expenses. It's got some entertainment and some ways that you can plan in, having fun. And maybe you like to go to the movies. Maybe you go out to eat once a week or every other week with your family. So in the first column, you have your planned spending, and then the next column, you have your actual spending. So again, this is how you're going to track how well you're keeping to your plan. And then check off on the right if you made it. Did you spend it as planned, or did you go over?
So we do have a question for someone who wants to go just back a little bit and have one more question about retirement.
Okay.
They have asked, mutual funds, are they good or bad? What is the best approach?
That's a very good question. And unfortunately, because I am unlicensed, I'm not able to answer that question for you. But I will say that many institutions offer complimentary advice on saving for retirement. So I would say talk to your credit union, talk to your bank, and see if there's someone that can advise you on that. I wish I could give you more on that, but because I'm unlicensed, I'm not able to.
But these kinds of questions are exactly like write these down and then bring them to your institution, your banking institution. So that's great.
Yes, thank you. All right, so we've gone through some key takeaways. So we've talked about how to be responsible with your credit, knowing what your resources are, where you can go. Talked about working to repay any debt that you have, what interest rates can really do to you, and some basics around banking and checking accounts, and then, of course, making a spending plan. All right, so moving on, I'll talk a little bit about income and paychecks. So we'll talk about how to read your paycheck, making the most of what you have, and then some other benefits and resources that are available to you. So when you get your check and you have a check stub, all of us know that what we take home is far less sometimes than what we actually earned. But where does that money really go, and what accounts for it? So first, in this example, we have a gross pay of $1,000. So we have, the end of our 2-week pay period, or however often we get paid, we've earned $1,000. So there we have mandatory deductions, and mandatory deductions are things like the federal income tax, state income tax, Social Security, which offers retirement, disability, and survivors benefits, and then Medicare, which is health insurance for folks over 65 and folks with disabilities. And then you have your voluntary deductions. So you have your 401k contributions. Maybe you have healthcare insurance through your company, commuter benefits. And then after all of those things are taken out, your net pay is what you actually take home.
So a question a little bit about refinancing.
Okay.
Curious about what is the best approach to refinancing, and what should they look for or questions to ask in that process?
Wow, we're getting advanced here.
Yeah, we are.
So it's a really great question. I am not personally a mortgage officer, so I may not have all of the details that someone that specializes in that might give you. So again, talking to the company that you have your loan with, or even another institution that you feel more comfortable with. Maybe you're with some servicing agency, you don't want to be with them anymore. So things to think about are how much equity you have in the house, how much you owe on the house, how much your interest rate and your monthly payments are, and what is your goal. So are you looking to get cash out because you've got a lot of equity and you need some money in your account? then maybe that's what you go into it with. Do you not have a lot of equity in your home and you're looking to lower your monthly payments? Something to consider might be to you may have to put money down and to refinance, because most companies now will not refinance if you don't have at least 20% equity. So something to think about, how much equity you have in the house. I'm actually, because we are doing, let me see, let me go back to do you have a web page open? We do, right?
You go to this window here.
This one, haha. All right, so I'm going to show you the Better Money Habits. Oops, as I type it in wrong. Whoa. Better Money. If I can type today, sorry guys. Habits, there we go. All right, when you get a chance, am I sharing still? Aha. Yep. All right. So we'll derail the conversation a little bit because of your question. I think it's a really good opportunity to show you what the Better Money Habits website looks like. Thank you. So when you have a chance, this information was built in partnership with the Khan Academy. And if you don't know the Khan Academy, they create some fantastic sort of free learning services online for students, for teachers. Check them out if you can. But this material was derived specifically because of the top questions that folks ask around credit, debt, saving and budgeting. And it's really put in a way that's kind of fun but also really informative, and in ways that's easy to understand. So one of the things that you can do, so you can come to something like home ownership, right? Or I can click on credit, and it will give me modules and information, videos, lists, how to prepare for home, what are the differences between buying and renting. So there's some really great details here, some lists, things that you can print out. There's also a tab here on refinancing. So I would recommend coming here to the website and, how to get cash out of your home, reasons to refinance, and kind of pros and cons, which I think will really answer the questions that you have. Of course, it all depends on how long you've been in your home. If you've been there a long time, you've probably got some equity, but also you're probably closer to paying it off, then you don't want to restart that process. So when you get some time, come to this website. There's also a process here where you can click on what works for you. So let's say I am working and I am currently a student. Click continue. And I would check here, what are the things that are most important to me? So I'm starting a new job maybe, or I want to save for college. Maybe I also want to improve my credit at the same time and refinance my house. So I'm going to click see results. And what the site will do is it will tell you, these are the modules that are best for you. These are things that you should look at. And it breaks it out between family, finances, work, and home. So when you get some time, come to the website, check out this information. Again, it's really great information to have. It is free. It is built mobile first, so it is most compatible with your cell phone. You can read it on the train, wherever you are, and you can even share it with your family, kids, and that sort of thing. So feel free to use that information directly. All right, so you might have to help me going back to sharing our presentation. Hopefully I've answered the asker's question. Thank you. All right. Sure.
Not so much a question, just a couple. This is awesome information.
Yay.
Thank you so much. So
Yay. Glad
thank you all for this live feedback.
Yes.
Yeah.
All right, so we'll move on. So in Better Money Habits, I'm again not planning to play the video, but there is some information about part-time income and freelance work. So if you are a rideshare driver or something like that, come to this this video when you have some time and really look at how to build a buffer when you have inconsistent income. And I think that's the key there, is that when you're not getting the same amount every couple weeks or every month, it's really important to know how to protect yourself against the fluctuations. All right. So when we talk about health insurance, this is one of the voluntary deductions that will come out of your paycheck. And currently, the law requires that any company that has more than 50 employees is required to offer health insurance. It is also required that preventative visits and tests are free for you. So those are things to keep in mind if your company offers a health insurance plan. It can actually be more cost effective for you to have your plan through them versus having to pay out of pocket for your visits. Although if you qualify for a Medicare or maybe even Medi-Cal plan, that actually may be a better option for you as well. So it's always good to know what the different options are for you. Something to think about is when you do have health insurance from your company, let's say, your bill is $1,000. You've broken your leg. Now you've got to go to the doctor. Most companies now will cover 80% of what you have to pay. So you have to think about, not only may you have that $35 copay or $100 emergency room visit copay, but you also will need to pay 20% of whatever that full cost is of that scan and the cast that you had to get on and the medication, pain meds. So you'll have to pay 20% of that. So how are you going to account for that? And I think that's where your emergency savings comes in, and something to think about for medical bills that come in later. Thinking about government resources. So again, we talked a little bit about Medicaid or Medi-Cal, so understanding what you can qualify for, which are generally income-based. Also think about the SNAP program, which was formerly the food stamp program. So this is, of course, an opportunity for you to get food and other, for individuals and families, fruits, vegetables, meats. You can even buy some hot foods. So something to always be aware of and look into to see if you qualify for that. There's TANF, which is temporary assistance for needy families. So this program helps women or families with dependent children. There is an income qualifier to get it, but it can help with food, shelter, and utilities. And again, Medicaid. There's also local resources. I really want to stress the local community options that you have. I cannot have an exhaustive list here, but think about some food pantries if you need them. They don't ask how much money you make. They don't ask, the food pantries like Alameda County Food Bank supplies food to a lot of different food kitchens and pantries in the Bay Area. And, using their resources, it's fresh food. It's not what people, may think that it's the stuff that nobody wants to eat. It's really healthy, great food that is available to us. Also, Goodwill offers a lot of services to folks over 65, students, youth, folks that are formerly incarcerated. They offer career advice. They offer they have programs for employment assistance and training, so always look into them. And then if you don't know about United Way 211, it's a 24/7 resource for you if there are any disasters or crises or anything that you need assistance on knowing where to go. Use the 211 option, and they can direct you to a local organization. All right, so we're back on spending here. So think about, again, more videos for you to watch, tracking your spending, saving for emergencies, finding ways to cut back. Some of the ways to do that, and you may already be doing these things, so some of this may not be new to you, but just to reiterate, ways that you can cut back are planning, have a set spending plan and really try to stick to it. Taking public transportation when you can. I came here today and I actually drove and I paid for street parking, which is very expensive. So thinking about taking public transportation when you can. Think about your phone plan. If you don't need all these extra, services, maybe you can cut back on some of that if you have access to Wi-Fi. Forgoing things that you may not need. Sticking to a grocery list. I am guilty about wandering the aisles and just throwing stuff into my cart. And even though I have a list, I still don't stick to it sometimes. So if you can, stick to your grocery list, plan out your meals, and that way you're only buying what you need when you go to the store. And then, of course, bringing your lunch with you every day can help you to stop from spontaneously buying snacks and food. All right, so those are some takeaways of that module. Again, understanding what are the breakdowns in your paycheck, knowing what resources are available to you, and really sticking with the plan that you make for yourself.
So I just want to pause here, and we have about 5 minutes left.
Wow, that
so
went
really quickly. I want to first just say thank you to Erica Jones from Bank of America. This is such helpful information, and I think if students are interested in it, this is probably just like phase one of some sort of information that we can provide on financial wellness. I also just want to make some time if we have any last questions that folks are kind of curious about, information that you want, some links for, any questions that have just popped into your head, whether or not you'd be interested in a second webinar, like please take this time to just type anything into that Q&A box. And we'll just kind of give you a minute to collect your thoughts and see what comes in. Okay. Looks like something has come in. All right. So this is a lovely message. Thank you for all the wisdom that you've shared.
Oh, yes.
We're all feeling like this is really great information. They do need to get to the next meeting. So have a wonderful, wonderful day.
Great.
Yeah. So
thank you so much for having me. And honestly, I am available. I am at your call, if you will. So if you find that this information is, if you'd like to dive a little deeper, the next module will be about fraud and identity theft. So if you feel like there's times where you need me to go a little bit deeper into some of this, I'm happy to come back. We can, add on to some of the already scheduled meetings that you have. I'm always happy to come out and explain some other things to you. So when you get the deck, take a look at the fraud and identity theft sections because it really can help you in protecting yourself online, protecting your accounts, knowing the difference between fraud and identity theft. So yeah, again, I'm happy to come out and go more into depth of those.
That's wonderful. And I don't actually think I introduced myself. This other voice is Kelly Nadler from Corrections to College. I've met many of you at the Leadership Institute, and if we haven't met, I look forward to meeting you. But I will be sending this information out. It'll come from Kelly at the Opportunity Institute. And someone has just let us know that they would like a little more information on student loan debt in particular. Okay. So that's something that we can really take note of and perhaps like consider for the next training.
Absolutely.
So that feedback is really, really helpful and understandable.
Yes, most definitely.
All right, well, let's see. We have a few more minutes. If anyone has any final thoughts or questions, we'll leave that space. If you have to run to get to class or a meeting, that is totally understandable. And just thank you all again for participating. Thank you for asking such wonderful questions. And like I said, either later this afternoon or Monday morning, I will be sending out the recording of the webinar, the spending plan document, and some links that were sort of referenced in this presentation.
Great.
All right, well, thank you all. We're going to end there.
Thanks everyone for having me. Have a great day.
Bye.